Hello and welcome back to another video. My name is Jared and today I wanted to discuss the stocks that I already talked about this year for January, February, and now going into March. Give an update as to where they are, if I'm still a buy, if I sold, where the market's looking at them, and see if there's any news out there for them that we can kind of cover today. With that being said, if you enjoyed this video, if you got any useful information out of it, please smash the like button and subscribe for more. You can always go back and watch some of the previous videos to figure out why I was actually a buy on these at the time. And let's get right into the video. So up first is actually a couple of sells that I had. Number one being Netflix. I completely sold out of my Netflix position. The reason being is they were doing the deal with Warner Brothers, and Paramount came in and did a better deal for Warner Brothers that would actually be less monopolized than everything. I was interested in Netflix actually taking over Warner Brothers. I actually thought that that would um, cause a little bit of a chain reaction to the positive side, even though it actually was negative all the way up until Netflix backed out. Once Netflix backed out, their stock price jumped. You can actually see right here, this is the range when they backed out, and it just went up and then it shot up. And they actually broke right over into the $100 mark. And I completely sold out of all my call options, out of my Netflix shares. The reason behind it, once again, I was interested in the deal. When the deal didn't happen, everybody was happy, so they rushed back to Netflix. It was a good opportunity for me to pull my profits on it. I believe I only made about 10% on my call options, which is absolutely fine. And then I made a few $100s on my actual shares of Netflix. And that was pretty much it, but it gives me capital to look towards the next opportunity and invest that into shares and stocks individually that have more upside potential than what I believe Netflix actually has at this point. I do see them getting back in that 110 range and everything, but I don't want to miss out on my opportunity for the $100 mark there. I think that was a good call from my side. Yes, there's probably still upside potential to Netflix, so I'm not saying that it's 100% sell. It's just a sell for me. I don't think the value's there after the deal actually broke to the bottom side and they didn't go through with it. Moving on from Netflix, we got Palantir. So Palantir is kind of a tricky one. You got a lot going on with the war in Iran right now. Um, you have Trump saying that Anthropic can't be used in the Department of War, Department of Defense, Department of War, whichever one you want to go with. And Palantir's model was actually utilizing Anthropic, and they kind of swapped to, I believe, OpenAI, which caused them to show a lot of strength. That's what brought their price back up. When their price shot back up, I'm looking at, I had some call options on Palantir that I was buying all through here while it was on its way down. In reality, I did end up selling my call options and I ended up making a couple $1,000s on the call options all in all. So I made probably about 40 to 50% on my call options. I figured this was a good time to sell off. The reason behind it is the news shifted. Everybody was against Palantir. It caused it to go down to that 130 mark, 125 to 130, somewhere in that range. That was the pristine buying opportunity that we had that I spoke about when I did my last video for the month. And then it actually spiked up due to this issue with Anthropic. That's great news for Palantir. I just don't see Palantir. I don't justify buying Palantir over 160 to 180. Once we start breaking these upper resistances again, I think we're going to have a lot of people back here that was buying over that 160 mark that's going to want to be taking some of their profits and or break even point and selling out. The valuation on Palantir is insane and is extremely high. They're a great company, very profitable company, great earnings, great growth. Their valuation is actually just high. Their PE ratio is high. Their price per revenue is actually pretty nuts. And so on the upward movements, I'm going to be selling off. I'm going to be taking my profit. If they end up coming back down to this 120 to 130 range, I'm going to be taking them right back into a buy category. I'm going to start purchasing shares again. So I did completely sell out of my Palantir option. That's the reason why. I just think it's a great opportunity for me to take some profit, and I'm not going to regret my decision. They may still have quite a bit of upside left to them, and I think they're going to do well. I just think that they're going to get into that 170 to 190 range, and they're going to hit a tipping point that's going to send them back down. In which case, I'll be waiting for that point, capitalize whenever I can, right? Get the value, get the money. Moving on to ConocoPhillips. ConocoPhillips, the reason why it's up front is I still hold my positions in ConocoPhillips. Everybody kind of knows what's going on right now with the war in Iran and oil prices going up. They did not skyrocket like the previous wars, which was kind of, I guess the market was a little bit more accepting of what was going on this time, and they have a little bit more history behind it now. ConocoPhillips still did skyrocket. They're going to be more profitable with oil prices going up, and they are going to be a earner for that. In which case, I am following my stop loss trades, which I spoke about in the previous video with ConocoPhillips. So if you haven't watched it, go back and watch that, please. And I was a buy in around 110, somewhere in that range, the resistance. I saw some upwards potential. I currently have a stop loss at about 112 to make sure I don't miss pulling any kind of profit prior to any kind of crash. In reality, if it sells off and I hit my stop loss, it's not going to be upsetting to me. I'm pulling out my little bit of profit, protecting myself from the downside, and still going to be able to capitalize on any future gains with ConocoPhillips. However, I am not buying any more shares. We are upwards of a higher resistance point that I'm just not interested in buying in. If we drop back down below 110 to the 103 mark, according to this chart, then I would be back into a buy stage looking at the long term value of it, but I don't want to miss out on any kind of short term gains from it. Moving on to AMD. AMD, I believe, is going to be competition to NVIDIA, and I think that AMD is actually going to do very well when all said and done. I believe they're going to be getting huge market share in the chip sector, I guess, tech sector, but wherever people are buying chips, right? I think AMD is going to be a massive gainer when it comes to that. They got great growth, they got great profitability. They had that Meta deal. Of course, that's going to take over, a span of 5 years, but they're setting themselves up for success. To me, they are still a buy right now. Anywhere below 215, I am still a buy, and I'm going to continue DCAing in, dollar cost averaging in, making sure I'm putting in a little bit every single week so I don't miss the ups, I don't miss the downs. I do have some call options out on AMD until the end of the year. I want to see where they're going with it. I believe their 400 series is coming out, and I think it's going to do great things. In reality, I am looking at long term hold on my shares of AMD, and I am looking at a medium to long term call option on AMD as well. But I am going to continue buying AMD. They have great things going for them. There's not really any new updates outside of the China regulation with NVIDIA and NVIDIA posting earnings and Broadcom getting deals for their chips as well. So they do have quite a bit of competition. I just think that they're still a low enough valuation that they're going to do great things and they're going to make a lot of people a lot of money. SoFi. I actually do have some news updates on SoFi. SoFi is still a buy to me. Let's go through the news real quick and then we'll come back to the chart. SoFi and MasterCard partner to enable SoFi USD settlement across MasterCard Global Payment. That's going to be pretty huge. If you're unfamiliar, SoFi USD is actually going to be a stable coin. It's going to be one to one with the US dollar. Cryptocurrency, I know that's a kind of a scary term to a lot of people, but it is backed by the US dollar. So if the US dollar goes up, USD matches, it constantly fluctuates with the dollar. So $1 per one SoFi USD. It it's just going to be the start of us being able to settle payments using cryptocurrency, but it's going to be along the lines of our normal nowadays system, which is massive to me. I think SoFi and MasterCard are going to do great things with this. I think they're going to be, you know, pioneers of doing it, and I'm very interested in watching it, and I'm going to be putting my money where my mouth is. I'm going to continue buying SoFi. BitGo selected to provide stablecoin infrastructure and support distribution for SoFi USD. That's just SoFi partnering with a cryptocurrency exchange. It's BitGo Bank and Trust. They're going to be supporting the infrastructure for SoFi USD. And down here, I just want to point this out that they have been around since 2013. It's not like they're a brand new company popping out of the weeds. Hey, look at us, rug pull kind of situation. I think they're actually, I'm going to do some more research into BitGo myself just for my own peace of mind, but it's not like they just came out of nowhere and they're going to be another rug pull causing people to lose a lot of money. It appears to me that SoFi is doing things the right way. They're making sure they're meeting all the regulation. They're backing their US stablecoin the way that it's supposed to be. And I think they're going to be doing good things to help pioneer the merge of our standard economy with cryptocurrency. Now, a quick note on cryptocurrency, I do not think this is the end of the bear market, especially for Bitcoin. I think Bitcoin's going to continue crashing. I think towards the end of this year is when Bitcoin's going to see a new bottom. In which case, if that actually ends up happening, I'll probably do a video because I am very knowledgeable and interested in cryptocurrency myself. I do own XRP, I own Crow, I own a little bit of Ethereum, so on and so forth. I don't really want to get too much into it. But for those of us who, if this sparks any kind of interest for you to go look at cryptocurrencies, please make sure you're doing your research there as well. Just because there's a hype cycle does not mean that Bitcoin's going to all time highs again, like everybody's talking about. There's ups and downs in every single market. You got to learn which direction the roller coaster is going in, when to get on, when to get off, and make sure you're not strapped in when it's going to crash, right? So SoFi Technologies, 1890 is the current price. I'm still a buy. Anywhere underneath this 21.18, I am actually a heavy buy. I think you're getting SoFi at great value, especially if we come back down to the $16 mark. Anywhere under $20 is just going to be fantastic for SoFi. I think it's going to be great things. We're going to move on from SoFi. We're going to go right into Amazon. Amazon has some good things going for it. In reality, there's some news on Amazon, and it's going to be their investment into OpenAI, and they expanding their compute deal with OpenAI by 50 billion invested and compute deal of 100 billion. Amazon also had some issues with their AWS going on. That also was an issue. Their system was down temporarily. Those issues are going to happen. It's infrastructure, it's internet, it is a website at the end of the day. They got all that fixed up and they're expanding their 38 billion AWS compute agreement by an additional 100 billion in over 8 years with OpenAI. It's a lot of money, but we already talked about that. They're going to be spending a lot of money. Their capex is going to be insanely high. I expect their capex to kind of cap and actually level out where they're talking about right now. And to me, Amazon is still a buy. We did cross over this resistance at 208.45, which is absolutely fine. It's still a buy for me all the way up until this 231.42 range. If we drop back down into this channel, I'm just going to be a stronger buy and I'm going to continue picking up some Amazon shares. In reality, these drops happen like we just talked about the roller coaster, right? You just brace in and you hit that and you come launching back up. Who knows how long that launch is going to happen, but you can see Amazon over the past years has just been steadily increasing, even with these massive drops. You're talking about in 2024, August, it just dropped pretty significantly, but it kept going up. I believe Amazon's going to keep going up. I think by the end of the year, we're going to be seeing this 240 range. I do believe there is quite a bit of upside potential for Amazon. We're looking at probably, 10 to 20% upside from here. That's what I'm looking for staying in. All right. So now we're down to Microsoft. We only got a few more left to cover. Sorry, I apologize for a long video. There was a lot of stocks. Obviously, the future videos are going to contain less stocks as these fall out of buys for me. And we'll just keep talking about them until I'm going to be adding new ones as well. So, Microsoft. There's not really anything new on news for Microsoft outside of the Anthropic deal. And this goes for Amazon as well. Microsoft is also allowing users to still use Anthropic AI, just not for the Department of War side. They can no longer do it for the Department of War side. And going from there, where are we at with the chart? We were just down in this double buy channel for myself, and that is what I was doing. I do own some Microsoft. Right now, I am looking at a average cost basis of just over $400 on my shares. I do anticipate Microsoft being back up into this 445 area. Actually, I would think that it's going to happen pretty shortly, depending on how this war goes. I think people are going to be rushing back to this tech sector because it's what they know. They're going to get away from the rare metals, rare earths. They're going to get away from the oils, where they feel safety in the war. I think they're going to end up swapping and they're going to come back to the tech sector, and I think it's going to explode to the upside. And Microsoft will be a part of it, in my opinion. I'm not a financial advisor. Please do your own research before investing, but I am still a buy on Microsoft. I think they got a lot of great things left ahead of them. The Trade Desk. Now, this one was a highly spectacle stock that I was calling out. A huge amount of speculation on it. In reality, we're looking at the Trade Desk was upwards of 120, 130, all in that range, and then it just dropped. It started rallying back, had a huge gap up, and then a massive gap down. Pretty much, they were waiting to see where the actual competition lies. How much of a moat does Trade Desk have? They don't have a very large moat. You have a lot of these companies doing their own advertisement, and that's exactly what these guys do, right? Now, they did just announce that they were going to strike a deal with OpenAI and they were going to manage some advertising for them, which would be massive. However, there is not numbers released yet, and there is not going to be a date for when that actually starts taking effect. If they're talking about working a deal out in the next 2 years, well, I mean, there may still be some hurt for the Trade Desk. However, I think their numbers show that they are in a very good spot right now to still be a buy. Anything under this 32 mark, I am still a buy. I would love for it to come back down to this 24 mark and continue picking up shares under there. I'm just going to take a look here, and my average cost basis for the trade desk is actually $41.27. I do understand that they have a 52-week low of 21.08 and a 52-week high of 91.45. That 52-week high is going to start coming down here shortly because they've been under it for a while now. And in reality, I would love for them to come down so I can continue average cost basing and DCAing and lowering my average cost basis. That's what we should all be trying to do, is pick up great companies at the best value possible. And I think they still have a lot of upside potential, especially if they start advertising with AI companies. I think it's going to be great things ahead of them as well. Plug Power, also very, very high speculation on this stock. They have a lot of things going for them. I got a news article to go through here, and they are rallying after a Q4 update, and they have a new CEO. It is actually a part of their previous, or a part of their actual leadership team already. He's going from CFO to CEO, effective immediate, and their CEO is moving to the head of the board for them. So they're not losing him. He's just moving on and going higher up, and they're moving up Jose Luis Crespo. And I think this is a good thing. They beat revenue pretty well over what the consensus of estimate was. That's going to be fantastic news for them. I think that hydrogen just has such a big future ahead of it, as long as we can figure out how to maintain it and utilize it to the best of its abilities. I actually think that hydrogen has a huge leap forward for it, and I think it's the start of it. And I don't know what it is. I have a big heart for it. We're not supposed to trade with emotions. Plug was one of my first stocks that I ever bought. I sold out when at all time highs. Well, not all time highs, but I sold out around $4, and I ended up buying back in when it dropped back under $1. I got an average cost basis of $2.46 in it. I was buying when it was under $1, lowering my average cost basis back down. Um, so I did pull profits on Plug, and I ended up buying back in. I think hydrogen is a part of the future, and I think Plug Power's got it going on. They're making great strides. So they did end up popping back up above this resistance line, and then they dropped back below it. Below this resistance line is when I'm still a buy. We could see them come all the way back downwards of $1, which would be kind of crummy for them, but at the same time, it's a great time to be able to pick it up. And that's exactly what I'm going to be doing. I'm going to continue DCing, and I'm going to continue lowering my dollar cost average. I think it's a part of the future. I want to be a part of it. I think there's great things ahead for it. All right, so PayPal. Everybody calls it pain pail. There's a reason for it. Even after I called out that I was a buy on it, it ended up gapping down pretty heavily, and it hit a 52-week low as of February 12th. 38.46, and then it actually had kind of a gap up here, and there's a reason for that. In the news, there was speculation on it being bought. I actually think that is a stronger possibility than what people think. I think it's going to draw people's attention to it, as okay, maybe there actually is a chance that they could purchase PayPal. PayPal is also Venmo. They have a lot of cash flow, which you can go back and watch my previous video about that. I don't want to get into all the numbers and statistics in this one because it's going to make for an extremely long video. I think PayPal has the cash flow, and for these AI companies or cryptocurrency companies that are barely making it and they don't have the cash flow turnaround, they're constantly taking out debt and loans. If they take out debt to buy a cash flow positive company, it can actually pay for itself, and they can help move into bigger endeavors and grow their business by purchasing PayPal. So I actually think it's on the table for this company to be bought. Now, what would happen if it does get bought? we're looking at, normally they pay a little around 1.5 to 2 times the actual share price going on or ongoing. And that would put us in between 75 to $80 a share on the lower side would be what would be bought out at. Now, if this happens, my actual average cost basis for PayPal is around 63.58. I'm going to continue lowering that. I actually think it's a good idea for me to continue buying in at anywhere below this $50 resistance. I'm going to continue buying. If we drop back down again, I'm going to start racking it up and backing up the truck, filling it up. And that's exactly the reason why. I just think it has a bright future ahead of it, especially if a company wants to come in and buy them. That's just going to give us a great valuation that we're going to be able to pull some profit out at that time. Will I wait until it gets bought? No, I will not. I will wait for the surge in the stock price once it is announced or the offer is made, because the share price is actually going to get close to what they were going to buy out at. That's when I'm going to be pulling my profit. I don't want to wait for litigations and courts and everybody to tell me if it's possible and all that kind of stuff. I don't want to hang on for that. Once again, we can't have the emotions into our stock trading because we have to be able to buy and sell depending on what the trends and the actual market is doing. Emotion just blocks that judgment. All right, we're going to move into a couple of SaaS companies. Also, I believe that um, Palantir was also getting a boost because of this SaaS boost or SaaS anticipated bottom. Now, did we actually hit the bottom? I do not know that for a fact. I believe that we are there. It's going to be happening in the next couple of months if we're not there already. I think people are just going to start realizing that AI also needs these SaaS companies, um, the data that they own, the technology that they have copyrights on all this stuff. It just blows my mind that they think AI can rewrite all of Adobe or Salesforce or ServiceNow's code and just do what they do on a daily basis overnight. It's just not logical to think that way. Is there a chance it could happen? Absolutely. Do you think that one of these companies ain't going to go after them and make a bunch of money off of it if they could prove that it was copyright or sourced from them? They're going to do it. So, with all that being said, I do believe that CRM and Adobe are actually still strong buys. They did break over this resistance in this tunnel that I was purchasing them at. I do think they're a buy. I think CRM is going to be a buy all the way up until the 266 range. I think they're just a strong player, a strong contender, and I think they're going to do very well. 265. Anywhere in between there, I actually think I'm going to continue purchasing. CRM has great things. They reported good earnings. Adobe has earnings coming up here shortly, about a week or two away. I'm very interested in that. To me, they are a buy all the way up to 292. At 292, I will slow down on my buying because I want to see if they're coming back down. If they come back down to meet this resistance, right back into buying. I think Adobe has a great future behind it. I think they're going to do great things, make a lot of money. Hopefully, that's always the plan, right? I do own shares of both and call options on both. I was picking up call options when we're towards the bottom of this resistance, so most of them are positive right now. I'm just sitting on them a little bit longer to see if we're actually bottomed or not, and see if that takeoff actually happens. So that is an update on all the stocks that I have that I announced as buys in my previous videos. A couple of them fell off, a couple of them might be a little stronger buys now, and a couple of them are actually doing some pretty good things. And I'm very excited to see what the stock market has ahead of us. I'm hoping this month of March is going to be fantastic for everybody. If you like the video, hit the like button, subscribe for future videos, and have a good one.